Keith Rabois had this tweet, and I think we talked about it 4 or 5 episodes ago. A bunch of capital allocators are saying, you know what? It was a great run, but I think I'm going to opt out. I'm going to move on to my next adventure. I don't want to deal with what we're dealing with here on this podcast, which is, what do you even make of this confluence of the pandemic, crypto, printing more money supply and interest, and unknowable valuations in the face of massive technological change from AI, biology, et cetera. So I thought it'd be interesting to talk about all of our decisions to stay in the capital allocation game and what we think about this retiring group of capital allocators who are, let's face it, retiring at 50 or...
Well, I had coffee with Keith this morning, and then he tweeted that on the heels of our conversation. So I think I can provide a little more insight into what he was thinking there. I think that part of the backdrop here is the concern that we're going into a very different environment than the one we've had over the last 10 years. I mean, over the last 10 years, we've basically had record good times because of this low interest rate environment, right? And low interest rate environments are fantastic for growth stocks. Now it looks like we're moving into an environment in which inflation is certainly not transitory. We don't know how long it's going to last for. And that creates an expectation of interest rates are going to rise. And so the next decade may not be as good for growth stocks. And you've also had, over the last year or two, price levels have been much higher. So you got to figure there's a whole cohort of VCs who've had a great decade, who've made a lot of money. And now they're asking, does it really make sense for me to sign up for another decade that may not look as good? And, the truth is if you're not the principal of your firm, if you're one of 20 partners, it doesn't make as much sense for you to stay in the game when you've just had a fantastic decade. You've probably made more money than you thought you were going to make. And now you're not so sure about the next one.
Freeberg, thoughts? I mean, you still want to build companies.
I don't know. I like building stuff and building new stuff that's kind of going to have an impact, and it's technically difficult. So that's kind of where I get drawn to spend my time. But I can understand people whose job it is to kind of manage other people's money and invest it for them, and they participate in the profits they generate, realizing after some period of time, like, hey, I've bought a bunch of lottery tickets. I mean, if you buy lottery tickets at the local 7-Eleven every day, and one day you hit the $12 million jackpot, you're not going back to 7-Eleven the next day to keep buying lottery tickets. And so, in the context of being a money manager to generate returns, and that being kind of your principal interest, and you kind of hit a return outcome that statistically, will not happen again, I don't see the point of the hassle of going back to work. I could see the psychology of saying that that's enough for me. I do think, however, most VCs are truly, we can kind of generalize all we want, but as we all know, we have lots of friends who are VCs. And I'd say generally the majority of them are very intellectually curious and driven. And what I am seeing is a shift of people who have had successful investing track records and have had massive outcomes, shifting their attention now. They take some time off. And I'd say almost 100% of them come back and they always ask for a meeting. And I'm like, sure. And then they're like, I want to work on climate change solutions. And so what I'm seeing is this kind of second act happening now. And we've seen it with guys like Chris Sacca and, folks who had these massive, massive outcomes in their first run. They know they're not going to, the statistical likelihood of doing that again is very low. But then, after spending a couple of years on the ranch or, surfing, you kind of wake up and you're like, hey, I want to do something meaningful with my life. Like, I got kids. I look them in the eye and I'm like, what should we do what do I want to do for the future for my children? And they all kind of come back around. So one of the things I'm seeing is this kind of second act phenomenon where VCs are moving away from being pure play technologists and making money to saying, I want to do stuff that's a little bit more meaningful and altruistic, coming into climate change. And as a result, we're seeing insane funding happening in climate change tech companies or climate tech or whatever the heck the label is this week. Stuff that, in my opinion, doesn't make any sense. Businesses that aren't real businesses, technologies that don't actually make sense, that'll never work out. But hey, that's always been the case in venture, right? 1 out of 1,000 works and, changes the world. But we are seeing that. And that's kind of a personal observation is I'm seeing a lot of these second acts going after climate change.
Chamath, this last year is or 18 months, pretty exhausting as a capital allocator to try to make sense of the world and get your bearings. It's like going through multiple storms. Does that make you more engaged? I get the sense, knowing you for a long time, that you and I might be similar. Yeah, the chessboards are getting mixed up, the pieces and the values are getting changed, whatever. It's making me more excited to participate and try to figure it out.
Yeah.
It's like a hand of poker to me. I'm more intellectually stimulated now.
Me too. I'm the most engaged I've ever been.
Yeah.
I mean, look, I left the money management business 5 years ago, I guess. And honestly, it was a very hard path, but it's been the most rewarding because I was able to focus on the things that I wanted. Look, if you do this job well, this job is voting for change with your money and making change using money. And that's great because money is not that useful beyond a very small amount. And then you have to question, like, what are your real priorities? So yeah, like grinding away at something that matters to me, I've always find fulfilling. And I feel like I am an athlete whose muscle doesn't decay by my mid-30s, but probably decays in my 70s or 80s, which is my brain. And so, I'm a rookie. So I'm excited.
Yeah,
I'm grinding.
The fact that things are compressing, or maybe there'll be less startups or less capital allocators involved, what I've seen in my career, post.com era, Web 2.0, amazing time to be alive. Amazing time because there were less. Anybody who started a company after the dot-com bust or after the 2008 financial crisis was a legitimate warrior who wanted to change the world and was incredibly focused. And then the sense of entitlement I'm seeing on all sides of the table right now, from founders to board members to investors, it just seems like everybody's in some sort of mad dash to secure some bag by any means necessary. And there's no focus on the customers and the product and the team. Everybody's, living in some just manic, money grab.
When you're in the middle of a paintball war, you're trying to shoot the paintball gun and you're trying to hit people and it's a little bit crazy on the field. But, as everyone kind of gets back to the locker room and they take their win, all humans ultimately are going to be driven by a desire to leave something in the world, to make an impact of some sort. And at some point, all the folks who have made a ton of money in this cycle, there were a lot of folks who made a ton of money in the last cycle, are kind of asking themselves, how do I leave an impact? How do I make an impact in the world? And I still have a skill set and I still have a capability to do so. And so then there's this search for meaning. And that's where you see kind of the climate change and the healthcare and all these other kind of paths start to form for people. I do think Web3 also offers another path of opportunity for folks where they can kind of rewrite the internet and think about how to reinvent the social model for humanity, the economic model for humanity, the governance model for humanity, the communications model for humanity. And Web3 kind of, and Web3 creates that kind of, that visionary kind of platform opportunity, and folks are all kind of excited about what's next. So, once the dust settles a little bit and you put some money in your pocket and you realize, it's not going to change your life more than, it did last week. And, you want to make an impact, and then folks kind of come back and they start pursuing, where impact will lie.
Sachs, let's go to you.
Sachs, what was Roboy talking about?
What were you guys talking about in this breakfast?
Keith and I just talked about how we're about to enter a very different kind of macro environment for growth stocks. And we don't know how long it's going to take, but there's no question that multiples and valuations are going to come down. And there's a lot of younger founders and investors who never lived through a bear market or a down cycle, and they're about to get a rude awakening. So look, I think it's a little different for us because we're all principals at our firms. And so therefore, if we're not happy about something, we could simply effectuate a change in strategy. But if you're one of 20 partners at a giant firm, even if you're the most successful one, it's hard for you to move that ship. And, your returns get divided by, it's 1 over N, where N is the number of full partner shares. And, if you just made a ton of money over the last 10 years and you're thinking about whether you want to sign up for going through a bunch of choppy waters, there's a lot of good reasons right now for people to reevaluate. Now, look, Keith and I were both discussing this in the context of, hey, this would be great for us because we're not going anywhere. But Keith did think that because the macro picture is changing, that it's one more reason for people who are on the fence and thinking about retiring to move forward with that.